thank you for joining us today, taking the time to answer a few of our questions. Let's begin with a little introduction of yourself, about the company, and any major developments ongoing as of now.
Oh, sure thing, Brian. So my name's Terry Harbort. I'm with Talisker Resources. We're one of Canada's most recent explorers. So we've taken the long path to through exploration, development, and then into production. And we achieved our first gold sales just a month ago. So very important time for us and very good response from the market. We've had about a 350% increase in our share price throughout that time. So finally great to get that validation as we become a gold pricer at all-time high gold prices.
Right. So like the majority of the companies at this conference, it will be the first time really engaging with the majority Nordic investor base, right? Whether that's institutional and retail. With all of that, what's the pitch? Why should these investors trust your management team with their investment?
Oh, look, it's a really straightforward answer when it comes to Talisker, and that is that Talisker Resources is a company that delivers on its promises. And we've been able to bring our project from a very small resource base right up to production in just 5 years. So if we say we're going to do it, then we do it and we deliver. And we think that we've got a well-laid plan laid out for the next 5 years of our company's growth.
Sure, absolutely. And you touched on this a little bit, but the company is leveraging its innovative laser-based ore sorting technology and has secured processing agreements with Nikola Mining. How do these strategic partnerships and technological advancements impact your cost structure and also the expected margins as well?
Well, if you like, Brian, I'll break those down into the two components that they are. The first component is toll milling. So it allows us to decrease the timeline that it takes us to get up and into production. And most importantly, it allows us to reduce the initial capital requirement that we need. So we don't have to build our own mill. We don't have to go through the traditional Lassonde curve as we wait 3 or 4 years to be able to permit, build, and then commission our own milling facility. So that's where toll milling really comes in. It helps us get to cash flow much faster. The ore sorting technology, which is really innovative, it's actually Tomra, a company based here in Sweden that develops this technology, and has a multifaceted impact on the economics. Firstly, it halves our trucking and milling costs because it reduces the material that we have to transport by at least 50%. But it has some more longer term tangible impacts. When we transition to our own mill, we need a mill that's half the size of what's expected because we're not milling so much, half as much power to come. It allows us to reduce our amount of waste, which then impacts on the cut-off grade of our projects and effectively doubles the grade that we're producing. So it has a lot of tangible and intangible impacts on the economics.
Sure. So touching again on capital allocation, how effectively is your company managing its capital this year and also leading into Q1 of next year, making that transition?
Well, we're managing it very well. We've got about $21 million in cash at this moment. We're in the early stages of mining, so there's a lot of capital requirement as we do development in waste material that doesn't have gold in, that doesn't pay back, so we need to allocate those funds in. We're looking in general at being at our break-even point towards the end of this year. That's in basically 6 months of production. It takes most companies 1 to 2 years to get to that point. So we're renowned for being a very frugal company and doing things with a very minimal cash base.
Right. What is one thing about your company that you wish more of these institutions and retail investors knew about your company?
It's really about the future growth profile that we have at Talisker. We've got a well-developed plan over the next 5 years to be able to ramp up our production, initially at the Mustang mine, but then look to bring our own, our second mine, the Olympus mine, into production. So ramping up one mine to 1,000 tonnes per day, looking at targeting 100,000 ounce production, while we're starting to build the second mine and effectively double that production portfolio. And really that's what the Talisker story is about now, is about growth and what we can grow the company to over the next 5 years.
So heading into your one-on-one meetings, what is the most important question these investors should be asking you?
Really, I think the most important question, and they should ask a series of questions, really.
Yes, of course.
Tell us about the management team. And we've got a really blue ribbon management team that's coming in here with a lot of experience and a lot of background. About the asset, very good quality asset, historic producer, very low risk to transition into production. And then also what our growth profile looks like. How can we grow this? The fact that we're not just looking to build one mine and hope that somebody buys us, that we're looking at building a real, meaningful mining company.
Absolutely. Appreciate you taking time answering a few of our questions, and best of luck for the rest of the conference. Much appreciated.
Thanks very much, Brian.
Thank you so much.